Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, Redfin just put out a report, all their data from last year to now. They are predicting a record year.
Mm-hmm.
Okay, we've got this report. It's got a ton of stuff in here. We've got like 20 slides of information. It's all data. So it's going to be super fun. I will do the play-by-play. Juana will be doing color commentary.
So do we have cool charts?
We have a ton of cool charts.
Okay.
Like I said, there's like 20 charts and things with data. It's very cool. These guys are going to, you'll be able to watch this video multiple times. Make sure you don't skip the ads. Okay. All right. Housing market update. The new year brings an uptick in early stage demand as mortgage payments fall and more homes hit the market. We kind of already knew that. Mm-hmm. Redfin got that probably from us. But so what we're going to do, we're going to go through here and just hit all the data. Mm-hmm. Okay? All right. So the first set of data we're going to go through here, this is so on the left tells you what it is. That next column is what it is most recently. The recent change is the next column, and then year over year. The reason why I'm saying this is because when I go further down, we don't have the headings on there, okay? All right, so the 30 fixed, the latest one was 6.78. It was actually at 1.6.61 or 6.62. That was the lowest. It's up slightly from 6.72 a week ago, but in year over year, it's up from 6.14%. That's for the 30-year, the daily 30-year.
Very exciting.
So that's not really a significant change, right? Okay, that's not exciting. That's the daily. The weekly 30-year is 6.62. That's the near lowest since May, right?
It's pretty good.
Because it's been high sixes and in the sevens, almost 8%. It's up from 6.48% a year ago, which is basically the same. Statistically, there's not going to be a substantial difference between 0.2%. Mortgage purchase applications seasonally adjusted. So what they've said, it says here is up 6% from a week earlier, up 3% from a month earlier, which is normal this time of year, right? Why is that?
Right. So it's kind of the beginning of the thawing, right?
Yeah.
So people have gotten done with the holidays, and now they're starting to, like I said, thaw out a little bit, depending on your weather. Even in Vegas, it's been really cold and windy and kind of miserable. So maybe not as many people going out house shopping, although you couldn't tell by the rate at which our phones are ringing and people are making appointments. So these are the brave people who are braving the cold here in Vegas and elsewhere, maybe snow in some places. And they're out there looking for homes, let alone the ones that are still snuggled up warm and will come out when the weather improves.
Yeah. What's interesting, though, is that the number of purchase applications is down 16% from a year ago.
I think it's
but that's misleading, too. There's a lot less homes on the market than there were a year ago this time, right? Right now, there's less homes on the market. In Vegas, there's substantially less homes on the market. So you have less people buying because you have less homes, so less people are applying for mortgages.
Right.
So it's not like, certainly demand, like the number of people who want to buy a house didn't fall 16%.
No.
They're not just like, forget, I'll just rent for the rest of my life. Okay, this is the Redfin home buyer demand. It's up 5% from a month earlier, and it's down 9%. It's a measure of requests of tours and other home buying services from Redfin agents. Here's another problem. Juana, this is also going to be biased toward the number of listings, because if you don't have any listings to tour, no one's requesting to go see them, right?
Right.
So that's kind of an interesting thing. It's very difficult to find out demand when you don't have the product to sell people, okay? Google searches for home for sale up 10% from a month earlier, down 20% from a year ago from Google Trends. That, of course, same thing. There's less stuff to search. People have sort of said, hey, when there's more homes, I'll start searching again. Okay, this chart here is one of my favorite ones. Okay, this is a bunch of data. All right, median sale price right now is $363,125. Year over year, it's up 4.1%. Okay, that's the biggest increase year over year since October of 2022. Okay, which was the year we said prices would moderate. It's exactly what they did.
Right.
Median asking price, $364,700, up almost 5%. from year over year, which is in hand, right? Monthly mortgage payment, it's $23.99 based on a 6.62% mortgage rate, which is up 7.4%. That's not a good one to be up. But why is that not maybe a big deal? Today's mortgage payment being $2,400 a month.
So it's interesting because, for example, I had a conversation today with 3 people who want to buy investment homes. It was a busy day, and the conversation was basically, well, we're fine with just paying whatever the mortgage rates are, and then we'll just go ahead and refinance, probably sometime next year because we can see mortgage rates are going down, and we can see that there will probably be more inventory this spring than there's been, and so we're ready to get on with it. We've been sitting on cash and accumulating cash for the last few years, and we're ready to go. So it was really interesting. So I had this conversation with three people today.
Yeah.
And then, this is just, the same story with everybody. And I'm just getting a lot of these calls, and to me, it's surprising that they've all kind of woken up to the same thing at the same time.
Yeah. Well, it's natural, right? If you generate cash, either because you're high income or you have assets that produce income, you're trying to figure out where to place the cash. And you just don't want to keep putting it in the S&P 500 index fund or some other thing. Sometimes you put it into real estate.
Right. That was the conversation, is that's where it's been. And now they're ready to deploy it into real estate.
And if you've bought a house at any time in the last 15 years, you've done very well because you've been collecting rents that have been increasing, and your appreciation, you want to keep following that because it's a pretty safe bet. The nice thing about this monthly mortgage payment, it's down $325 from the all-time high, which was October 22nd.
Right.
Okay. What?
Oh, nothing. I was just going to say that, what's interesting to me is that all these people kind of woke up at the same time with the same story, but these are not people who are new to investing. All these people already have rental properties.
Right, yeah.
So I thought that was interesting too.
They're existing clients, though.
Yes.
Yeah, they're existing clients. Okay. Pending sales, about 50,000 current. That's under contract nationwide. It's down 2.5%. It's the smallest decline since Jan 2022. But the reason it's down is because lack of inventory. Okay. New listings, 44,682, up 9%. That's that uptick they talked about. But naturally, when you hit the lowest level you've ever been, going up is just going back toward normal, like the normalcy. Active listings, 775,000, which is down 2.9% year over year. Smallest decline since June. Months of supply, 4.2. It says here 4 to 5 is considered balanced with a lower number indicating seller market condition. So it's on the low end of supplies on the low end. These are national numbers. Depending on where you are, it's a lot lower, and some it's higher. This is when we have some of those numbers here too. Share of homes off market 2 weeks. This is mean they sell in the first 2 weeks. 24.9%.
That's pretty quick.
A quarter of all homes in 2 weeks, boom, they're off the market. Yeah. And they're off the market because the sellers just said, oh, it's been 2 whole weeks and it hasn't sold, so we're not going to sell, right?
What's interesting to me is also the conversations with sellers. They want to buy, they want to sell. There's nothing out there for them to even consider, so they don't want to list because they don't want to be homeless. So That's been a consistent conversation in the last few weeks.
Yeah. Median days on market, 42. That's 2 less than last year. That's pretty low. That's median, and half the homes, right? Share of homes above list price, 23.7% sold above list price. That is not a crashing market. That's better than a normal market. Share of homes with a price drop, 3.9%. It's not very much.
Nope.
Average sale to list price, 98.3%.
Yeah.
It's pretty good. That's pretty normal. Like, these numbers look normal. If I'd shown you these numbers, you'd have probably said, oh, it's probably like a normal year.
Well, 98.3 is actually really good because most of the time it's lower than that.
Yeah, I think it was 97 or something, like normal markets. People just have that over. They want it, like when home prices are 300 grand, everyone wants to list at 10,000 more, whatever. Okay, now we're going to go through some of the metros. Biggest year over year increases for sale price. West Palm Beach, 20%. Newark, 17, Anaheim, 16, Boston, 13, Miami, 12. San Diego's got to be close in there. It's probably got to be 10% for San Diego, and Vegas was not. We were about 6. Biggest year-over-year decreases, Austin, only 3.3%. So they're starting to bottom out because remember they were the only market in 2023 that didn't lose money according to was that CoreLogic or Fannie Mae?
I don't remember, but it was when they looked at the top 50 markets. Yes, okay. They were the only market to be down.
Right. So and then it's got Fort Worth, San Francisco, San Antonio. So I'm not sure about these numbers because San Francisco actually had an increase in price this year. And then Fort Worth is part of Dallas, and Dallas is actually kicking butt. If you go over to the next one down there, pending sales, this is the number of sales pending. You can see Austin 10.6. That market's starting to kick it. Remember, market was the number one market to watch. Austin is the number one market to watch this year.
Right.
And then Dallas, San Jose. San Diego pending sales down 12%. Wanted. That's mostly because
there's lack of inventory.
There's lack of inventory.
There's nothing on the market.
There's nothing on the market. Okay. And then this is new listings. Phoenix had the most, 21.6% more. Austin had 20% more. That's really a hot. I mean, it's really, there's a lot of stuff going on in that market. And then San Francisco didn't have as many. Atlanta didn't have as many. Okay.
So even though those numbers, they're plus, 20% or whatever. Yeah, but that's over a really low year. So what does that really mean? It doesn't even measure necessarily to a normal market.
No, because when you compare, it's just like the Crash Bros and everybody want to compare the May or June of 2022 prices. That's the normal price. When it was artificially high, like for a month or two, because of all the people who panic, I've got to get this 4.5% loan. I've got to get a house in a week. So they just didn't care. They were just bidding up as high as they could to get the low interest rate. So that was a little fake. Okay, this is the median sale price. Now, if you look at these lines, you're going to see the same lines in all the charts. The blue one is 21, the red one is 22, the orange one is 23, and then at the very top, it's got that, it looks like it's blue too. And that, as you can see, we're the highest sale price ever, higher than 21, 22, and 23. It's just a little dot over there where it says January 7th, 363. We're starting the year, the highest median sale price in the U.S. we've ever started. And you can see seasonality. This chart shows seasonality. It shows prices will go up effectively until maybe June or July, and then they'll drop off.
Yep.
Okay, that's a pretty good chart. Median asking price, this chart basically follows it, up 4.9%. Same thing, we're starting the year with people at the highest median asking price. You can see here that it's the same thing, that price goes up basically to like June. Now remember, there's a difference between when you list and when you sell. Right? So there's usually a 2-month lag there. Those are leading indicators. We're seeing those in Vegas. We're seeing them in Henderson, North Las Vegas, and in our metro area. We're seeing all that. Home buyer housing payments up 7.4%. This is mostly interest rates. It is also because home prices. It's mostly interest rates though. This is not a good one to have higher. But here's the thing. At $23.99, yeah, but the median rent in Vegas is $2,100. So, I mean, your rent went up the last 4 years too. So, the home prices. And remember, once you lock in this price, it's locked in, or it only go lower, right? Because you refi when the price goes down. That's a great thing about a mortgage. You say, my mortgage is $2,400. Someone goes, I'm going to laugh at you because I only pay $2,000 in rent. So I make $400 a month more to you. You were great. And then you run in 5 years later in a supermarket. And you go, how's your house? You go, it's great. My payment's $1,600 because I refied. They're like, what? Yeah, it's $1,600 I refied. How much you paying in rent now? Well, I pay $2,500 a month in rent because the rent kept going up every year. You're like, well, now I make $900 a month more than you, and I have $100,000 of equity in my house. So, okay, pending sales. Pending sales are down a little bit. You can see the trend here. It'll peak in the late spring, but this is just because of low inventory.
Right. So we were talking about this before. In the last few weeks in Vegas, the ratio is like something like almost 2 to 1, which means for every 2 homes that get accepted offers, only 1 home comes on the market. So that's why pending sales are down, is because we just have diminishing returns as far as the difference between homes selling and homes coming on the market.
Vegas is going to be an extremely hot market, I believe, this spring.
Yep.
Anecdotally, we predominantly, just so you guys know, work with sellers and listings. We've done over 3,000 of them. We've done mostly our investor clients for their investment purchases and flips and things like that. We're almost being bombarded with people who are trying to buy houses in Vegas. Yeah. And almost nobody is. We do have listings, but it's mostly people wanting to come here and buy.
Right.
That's kind of weird for us. We're like, that's super anecdotal. This is the new listings of homes year over year. Looks like it's right in line. You can also see here how the number of listings goes up and declines. So,
okay,
on that chart.
It's a lot of charts.
Lots of charts. Active listing of home for sale. Now remember, 2022, if you go back to the early part of the year, was super low because mortgage rates were going up. So all the homes were disappearing really quick. There weren't many homes coming on the market. And then it went high because that was when mortgage rates, that was when you were hearing all the crash pros talking about the housing crash. And then magically what happened is the number of homes started falling off the market again. And we had almost no price decline. Actually, nationwide, year over year, we had a price increase. Just it was a few markets. Vegas, Boise, Austin, a couple other ones had some minor price declines year over year. So that's pretty interesting. Bottom line is I'll show you this one, next one. Months of supply, 4.2. We are a little on the high side. What's misleading about this, though, is because it's also because we have low number of buyers because of interest rates and prices. So,
4.2 months of inventory is not on the high side because, a normal market is 6 months.
Well, what the other thing too, wanted this chart that they're looking at, it only shows 21, 2, and 3, which are not typical markets. If we were to showing pre-pandemic 2015 to 2019 markets, they would all be above this. Like those charts wouldn't even, the top of this chart's like 4.5, they would all be much higher. You would barely be seeing like most of it wouldn't be on the chart. It would be above the chart here on that one. Next one is pending sales under contract within 2 weeks. You also, again, you can see that this nice trend. It's very predictable. What's interesting, Juana, is we look at these charts. The market is still pretty predictable, even with interest rates going crazy. And we were told all these crazy things would happen because of interest rates. And literally none of these charts, if I showed you this chart and said, what's going on with interest rates? You'd been like, I don't know. Say it was 2019 and the going rate was 3.5 or 3.7% or whatever. And I'd say, hey, these are 3 years, 4 years in the future. What does it look like, interest rates? You'd be like, I don't know, it looks pretty normal to me. I don't see anything dramatic. I said, hey, what if on this chart somewhere interest rates shot up just in 1 year for like 6 months? Where was it? You wouldn't really be able to find it. You'd have a hard time trying to find it, right? On this chart. Be very difficult. Okay. Homes sold in a median of 42 days. That's high only for the last 4 years. If you were to go back previously, it was very difficult. Median home sales were definitely over 60 days for median home, maybe 50 days. But a home sold above final list price. 2022 was a pretty hot year. That bump right there, the red bump, that was the mortgage rate. Oh my God, we've got to get the house. Just let's buy it. Let's do this and let's go. 2021 was just outright, flat out, super low rates and everyone just overbidding to buy the house. So that's why when you see those are, we can explain those. 2023 actually looks more like a normal market, unlike the other two. What that says to me is when I look at where we're starting the year here at 23%, it looks like we're going to have more of a normal market this year. Right. I think this is like our year of going back to normal. Wouldn't you say that?
I would like to think so.
Listings with price drops. Here we are. Remember, these are not typical years. These are atypical years. You can see the red line. That was where interest rates went up. On this chart would be the only chart of all of them where if I said, what was going on weird one year, you would say, hey, what was going on in that red year, 2022? Like, what was that all about? The 2022 is the red. It doesn't line up with the little numbers because the numbers are not in the right place. But the red is 2022, the orange is 2023. And that was the interest rates shooting up. Here's another one. Average home sold for final list price. What's interesting is that the red there peaks out at 102%.
Wow.
So, and that was the peak. Remember, that was the massive push. That's where home prices just popped up for a short period of time. It was not the long term. This is what homes are worth at what they've always been worth, like people tried to claim. And the other interesting thing about this is, I would say probably every home we sold in 2022 during that time sold for over list price. We sold a bunch of homes that year.
Yeah.
All listings, right? I don't think we did any buyer transactions in the spring. And they were all like that. Like everyone was multiple offers within, I mean, you were getting calls within an hour of it going in the MLS, right?
Yep.
From agents. Okay. Here's another one. I told you I have a lot of charts. Redfin home buyer demand. I'm trying to get through these so the video doesn't last all day long. Redfin home buyer demand index down 9% year over year. This is a super goofy chart because it looks like it's absolutely, I don't know, needs to take Ritalin or something. Definitely, if this is your heart rhythm, go see your doctor. Call 911. Go to the emergency room. This is very bad. But this is also, home buyer demand is down because the number of homes available are down. That's one of the factors affecting that. That is the absolute last chart. 20
Yay!
charts.
Sorry.
I don't know how long it took. We get through all the charts. Okay, Juana, let's summarize this because, 2024 normal year.
Yes.
We will get more listings.
Yes.
Listings will go up. We don't know how many more we'll get. We'll, on a scale of 1 to 10, how competitive it will be for people April, May, June to be purchasing a house.
It'll be really pretty exciting.
It's going to be pretty exciting.
Yeah.
There's a lot of money on the sidelines.
Yeah, I mean, look, we're seeing that now where, there are properties that have been sitting there for 2-3 months with no game, and then you call and say, hey, what's going on? Can I show the property? And say, oh, by the way, we have 3 offers. Like, you haven't had anything for 2 or 3 months, and now you have 3 offers all of a sudden? And that's what's going on.
There's a possibility of 2 interest rate cuts by June. And the one estimate I saw, the most aggressive estimate was the Fed would cut rates 6 times next year, and then so if that happens, we're going to have mortgage rates down in the 4s again. So that's going to be, I don't know, that's going to be pretty crazy. Homes will be more affordable, but then people will be fighting over them because everyone will be able to get a loan at 4%.
Well, see, I don't see homes being more affordable. I just see homes being about this about the same because I don't see that sellers are going to not do some profit taking when they've got multiple offers.
Right. But
so when you're factoring in that you're paying more for the house with a lower interest rate, I think it's going to be a pretty similar number.
We're assuming people will sell.
Yes.
Because our investors are not selling a property to go buy another property.
No, they're all just buying.
Adding on to their
they're all just buying.
Thing. And we're doing the same thing. We're adding on.
Yep.
Hopefully. If you have a smoking deal on a house that would be a great rental in Las Vegas and you do not want to sell it on the MLS, you just want to sell it directly to us or another investor, I'll put our information below in the description. You could click on it and reach out to us. Looking for something that's reasonable, has to be at least 3 bedrooms.
Right.
And not over 400,000.
Right.
So.
Okay.
Yep.
So that was fun. What is the right number of charts to have on these videos? I would like to know.
Yeah. Inquiring
minds want to know. So leave us a comment down below and let us know what the right number of charts to have on these videos is. Let us know what the right length of the video is. That would be interesting. Occasionally somebody tells us, so we like that kind of feedback. Please remember to like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.